Well, hello, folks. I'm LA Little, and this is your daily TA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened today, what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel LA Little. You can catch me there. And I welcome you to ask questions if you so choose. I'll look at stocks, I'll answer questions, whatever it is you have on your mind. And in these markets today, there should be a lot on your minds because the volatility is huge. We had big spikes up, big spikes down. Another day of trying to break down. Matter of fact, we were breaking down. We were down over 3% on the indexes in general intraday. You can see here on the Dow closed down 173, but at one point it was 1585. It was down almost 400 points. We had or was it more than 400 points? I think it was actually. I think it was like 455 at one point. S&Ps closed down 15. They were down at 1820 at the lows. That's 40 points off the lows, folks. They were at 55 down. It was over 3%. What you should notice here, when we're looking at this, is what outperformed? Small caps. Again, that's 3 days running now. Small caps. What else? NASDAQ, composite. That's two of the things that I've been talking about that we'd have to see change, right? We'd have to see those outperform to get some sort of a sustainable bounce. And, we're going to talk about that whole bounce idea a little bit more tonight. But let's run through some more of the numbers as we go here. Gold was up. The dollar actually reversed today, down 1%. Big move down there. It came into that support area we've been talking about the last couple of days. Oil was down one more time. But those are starting to look pretty washed out. We'll look at some of those charts. Silver, gold, the bonds. Now, the bonds only ended up 0.75, but they were up huge at one point. You can see on the high here, 127. They closed at 122. I mean, that's an amazing move. In general, amazing moves in a lot of places. Let's pop over to our charts and see what's happening here. And kind of go through this whole ideal of a bounce and the possibility of it and how it would get started and how it might play out. So if I pop in first S&P 500, you can see this huge tail. Traded all the way down to 1820, closes at over 1860, almost makes it back up. That's a hammer reversal, but huge volume. And what you're going to see is huge volume on everything. Whether it was spiking a top or spiking a bottom, it left volume in all cases. And so if in fact this is some sort of a short-term reversal, then I suspect what you're going to see is everything that was going down is going to flip around and start bouncing. Everything that was going up is going to flip around and start retracing. And so if you're thinking about bonds or you're thinking about gold or you're thinking about these other things like that, they probably are going to try to come back, whereas if you're thinking about equities or some of these others have been going down, they're probably going to try to bounce. The question is was today the bottom? After hours, we're down another 20, 25 points. Huge spikes to the downside after hours, off of earnings, and some of these totally annihilated. Netflix was down. Well, this is during the day, volume expanding. This thing was down 120 points. Yeah, 119.12, 26%, down to 330 after hours. Okay, 330. I probably got to go back to monthly. I can find it here. 330. This thing's coming after these lows again. 317. It's going to trade down. A lot of times I tell you the support zones on the TA Today charts tell you a lot about how much risk there is. Look at where the support zones are. You had them up here at the top. But you don't have any more until you get down here. And where does this thing go? It goes all the way down there. If you're in this, you got crushed. Coral icon, hello, because I know you're in it. About time somebody spanked his rear. Short-term reversals everywhere. After hours sell-off, it's there. eBay also gets hit after hours. They're saying they're not going to make as much money. eBay, let's see what they were down. It looks like they were down about, no, not that much, 2%, trading at 49. They're going to come down, test the lows again, so nothing big there. But getting back to the general thoughts here, S&P's down big. They are potentially putting in a bottom. And if we look at these others, you got the same thing here. So let me pop over. We'll go to the Dow. Same sort of thing, Dow. And actually, one thing I didn't show on the S&Ps, we can show it here on the Dow, is all of these are now breaking swing point lows. Remember, the NASDAQ, the Russell had done that. Now we're getting it on the other indexes on a weekly. So the weekly index starting to flip over. Unless they get a big rally, we're going to get breaks of swing point lows on the weeklies as well. The fact that we have volume at these lows today strongly suggests that we're not done. The question is are we done for now? In other words, this leg down, are we going to get the bounce, come back up, and do retest regenerates off the bounce? So if I look at the S&Ps, where is that? Well, it's back up here. Is this bounce going to take us back up into this area and then we're going to regenerate lower? Because what you would have if it does is you'd have this sort of a scenario, right, to wherever it comes and then down again. And so this is going to set up huge potential ABCD structures if and when it bounces and to where it bounces. Because now it's going down so far, it's going to be a long way back down. So, the question is today the bounce? And as I go on along here, we'll talk about it a little bit more because there's a lot that goes into that equation, because you're looking after hours at weakness, you're looking intraday at huge volume, those are negatives. You're looking at a big rally being necessary on the trend to keep the trend transitions on the weekly from firing. You've got Europe crumbling. I mean, let's go look at those guys. There's really no help in terms of the way these charts look. So let me pop over and we'll go into like maybe the CACs and the DAX. Let me get those charts up real quick here. So if I pop over to, let's just start with London's FTSE. So the FTSE, just barreling down. If I look at the weekly, all these swing points break. All the swing points, folks, not just one, 4. That looks pretty much like what we've been seeing in other places, where we're seeing, huge swings to the downside. Here's the CACs. What does it do on the weekly? Breaks them all. Going after the lows, got volume. If we look at the DAX, now the DAX is a little better shape, but still, this is not a pretty picture. Here's, continuation down. Here's the weekly, breaks all 3 swing points. So this is breaking down. Now, if I look over in China, Hong Kong, they're actually holding up. You can see them here holding lows. That's the Hang Seng. And if I look at the large cap 8 shares, they're doing the same thing. So a little bit of divergence where you're seeing some of the markets hold, but these big volume spikes down here on the S&P 500, those are going to get retested at some point. It's just a question of when. I don't know that it's going to be tomorrow. As a matter of fact, we came up so far, I think it's going to be hard to get back down there tomorrow. But in this volatility, I can't rule anything out, and I don't think you can either. Let's look at the bonds. If I go over and pop up the bonds, look at the spike on the TLT on the 20-year. Big spike, huge volume. Usually that sets up some sort of a range trade. This probably was huge short covering today. Bonds just don't move that much most of the time. Here's the weekly. Again, huge moves. We have to go out to the monthly to find something out there. This thing almost spiked to the top. So it spiked all these swing point highs, and it's probably going to have a volume at the end of the week. This is going to try to, test this swing point high and get over it. 208 there. We're doing 140, 149, and today we got two more. Yeah, it's going to have the volume. So bonds continue to press higher. That also, the fact that they spiked it with a high suggests that they're not done either. So when I look at all those things and consider all those things, what does it mean to me? It means that we probably have some sort of a bottom taking place here, at least on this leg down. But the final leg down isn't done yet. I doubt we're done yet. Can we get a 2-3 day bounce? Sure we can. You got the things happening that need to happen. The Russell, the NASDAQ, right? Leading to the upside versus the others. You've got washouts now in some of the sectors. You've got all sorts of items like this that are suggesting that you're going to get some sort of a washout here that allows a spike. And if you go over to the front page, you can actually see an article that I did today for Market Watch on that idea, and I kind of lay out the same ideas, the same theory there as to what might be happening. Okay, so that's kind of the overview. Let's pop into a little bit more of the detail here with respect to what else happened today. So let's go back. We've been looking at, and when I'm talking about washouts, we've been looking at some of the sectors and saying, okay, are these washed out yet? In particular, the XLE. Remember the XLE, this has been coming down with regular abandon. I mean, over and over and over. And that trip on the way down has been ruthless. I mean, it's lost probably 30% probably. Let's actually just see here. I'll pull up a monthly, or actually I'll pull up the weekly and take a look at it. So on the weekly, it's going to have more volumes. So again, it's going to leave volume at the lows. It's underneath these two swing point lows now, which would transition this potentially on the monthly if it were to hold for the month. Here's the monthly. Underneath those lows, you can see the volume coming out of this. This price point now on the XLE, 80.56. Go back to the highs of 2011, folks. 80.97. This thing has gone all the way back to the highs of 3 years ago. That's the kind of damage that has taken place. Now, are we going to see the same sort of damage take place in these other sectors, in these markets? I think this is an extreme case because, this is commodity related and we're getting a total washout in the commodity itself. But you can see the sort of damage that can take place. This top was 101. We traded as low as 77 today. That's, what is that, 24 off of 101? It's 25%. And it's straight down. So I think that one's probably just about washed out. And if I go back to the daily, we got more volume one more time. So this can, again, test the bottom. Doesn't mean it's done. Yeah, it's close. Yeah, it's way down. But, there's no sign yet that it's over. What you do see a lot of times, though, especially when you have this sort of action to the downside, is that one of these large volume spikes ends up setting up the range, right? So that range, if it leaves the low at the bottom, which it probably is going to whenever it does, and this is a huge bounce back up today, so this may have been it today, it leaves that volume, which means that it's going to be range trading for some extended period of time. And by range trading, I mean this is your low now. You can see that. And then it's a question, okay, where's the high going to be on the bounce? Can it get up this far? Can it get to this bar? This bar has all the volume on it. Can it get to that, that area there. That's going to be the question, right? And you don't have a lot to work with other than the fact that these kind of extreme blow off, washout, whatever you want to call them, moves set up range trades that then trade for some extended period of time. And I suspect that's how this one's going to end, whether it's today or tomorrow, whenever it is. It's going to leave volume at the lows on all the charts. That's the XLE, and that's one that looks like it's trying to turn. If I look at the rest of these, here's another one that tried to turn today, IYT, and that's despite all the Ebola, which has been driving this one down. The airlines have been getting hit hard. Trying to look elsewhere. XLY actually acted okay today. Actually got a nice spike up. I don't think it actually got back over at 63.19, 63.17, but didn't have the volume hammer. Again, we had volume at all the lows again today. Oh, another one that looked washed out today was the SOX. And now that actually brings me to another story, and that is Intel. Remember last night Intel was up 3%? Well, today it was down 5%. As a matter of fact, if you wanted to do something with Intel, today was not a bad day, because if I pull this back, I'm going to put it on a monthly. If I pull this back to the monthly, that swing point high was 29.27. You get down to 29.65. That was the breakout area. But if you go back, I only go back 5 years on these charts. If you go back to 2000, 30 has been the number all along. This thing trades down underneath 30. That was the big breakout for the last 15 years, 14 years. It gets over, it comes back and tests that 30 area one more time. And remember, Intel last night upped their guidance and said earnings were great. They still got caught in the downdraft today, and then they reversed as well. If we put them on a daily chart, they reversed. This is one of the stocks that reversed pretty well today. Closes back up underneath here, like everything else, leaves volume. But if you look at it on the monthly, you're not going to see the volume there comparatively to what you saw in those 30 areas before. So I think Intel actually is probably going to try to work higher from here, even though it looked horrible today. There's no other sectors here that probably are worth looking at. Those are the ones that I wanted to highlight. I want to pop over to the dollar. And the dollar, the dollar we had talked about. If you've been watching the last few days here, I've talked about the dollar trying to get back into this area, this support zone, and the TA Today charts have it, here for you. Volume expands, comes into it, but what's it coming into? It's coming into these big volume bars here. Actually, just this one doesn't have as much. Flips around, closes out of it. I think it's set up the range finally. We've been talking about ranges. I think you're going to see ranges develop in a lot of places. This is one of them. And I think you saw the range here today start to set up. And that dollar's probably going to work back up now, which, of course, if it does, it's going to hurt the gold market. It's going to hurt some of these other markets that have been bouncing as a result of the dollar trying to pull back. So that's the dollar, and those types of markets I'm talking about. If I pop in here, for example, to gold had a decent spike up, some decent volume. I think most of that was probably short covering though, and so gold probably going to work its way back down. The test on gold would be this bar on the way back, 117.71. And given these markets, it might not take very long to get there, like maybe 2 hours in the morning. So that's the way gold's setting up. Silver kind of looks the same. Silver's been weaker because it's industrial and still looks weaker. And silver can actually come test the low of this bar again, September 30th bar. I had a question here on the SPY. Let's pull up the SPY and read the question. So it says, today the SPY found support. I was watching the 4-hour chart, and it bounced off a high volume bar on 12-18-13. 12-18-13, 4-hour chart. Wow, okay, I'll just take that for granted. The volume that day was 173 million on 4 hours. Today the 4-hour bar was hit with less than that. In addition, in the last 4 hours, massive buy volume, 218 million shares came in. I believe the sell-off is over for now based on that. The 218 million shares on the SPY in the last 4 hours was the largest buy volume on the SPY in more than 2 years. Okay. So I guess the question is do I agree? And I guess I've kind of covered that already in that, you know, let me back up and let me just try to say this in a different way. You can get bottoms in one of two ways. They can be blow-off washouts, which today would qualify potentially, especially if you trade up tomorrow. The other thing that can happen is that you get some sort of a good test that tells you it's the bottom. Now, the good test that tells you the bottom is the better case because that puts in a bottom that should last for some period of time. Because why? What is it telling you? Let's see if we can find a bottom somewhere. Let me go to. You ain't gonna find any bottoms right now anywhere, probably. Oh well, the dollar. We just did it on the dollar. You know, we were talking about the dollar here. This large bar is on September 19th. That low, the bar we're looking at, and I'll just circle it for you. The bar we're looking at is this one. Okay, that's this volume bar. That low, you know, that day's significant because a lot of volume came in. Now, the dollar is probably not the best chart because there's not a lot of volume all the time, but just to try to make the example, when you come into it and you test it and you have less volume, it's telling you that nobody's willing to sell at lower and lower prices. So if they're unwilling to sell at those lower prices, that's a good indication that the price is going to try to reverse and go back the other way. Now, it doesn't have to be a lasting volume, a lasting low, but many times they are. Because, you know, and when I say it doesn't have to be, because, you know, people with a lot of money, which is what we're looking at, can be wrong. Just like you and I can be wrong. And so they can put their money on the line and lose it. So it doesn't mean that it's going to, you know, guarantee a work. But it does mean that people with large money that's probably got a lot better research than you and I have decided that that's probably the spot to buy it and to quit selling it. And when that happens, that's a more lasting low than the other type where you just simply wash everybody out and they give up and throw out everything. Yes, those can put in nice big reversals and large spikes back the other way. But many, many times, when you come back into those bars, and I'm going to go back to the S&P on that, when you go back into those bars, then what you find is that once you get into the bar, you know, you kind of get magnetized to go test that bottom again, right? It's kind of a lingering question. Is that it or not? And so, you know, if we assume here, and we're just going to hypothetically do something, if we assume that, you know, this S&P, for example, trades here and then back up some more tomorrow and eventually makes its way up to here and then rolls over and starts trading back down. What's it going to do when it gets into this bar? Well, first of all, that's going to be a good spot to try to buy it, you know, for those that are using these bars as their stops, right? But if it gets in deeper, it's going to try to get down here. And so these kinds of bars are not the best lasting trade bars, if you will, because usually they set up some sort of a range, and you can always test the bottoms and tops of the ranges. And in this particular case, of course, our top range is going to be this retest regen zone, which is right up here. So that's what I mean by the difference between them. They're different types of bottoms. They have different characteristics, and how they play out is different for each one. Okay, so tomorrow, Thursday, as if we haven't already had a full week, we have selling after hours. We have more earnings tomorrow. We've got Google. We've got a lot of big names tomorrow. I can't mention them all, but you know, if I just kind of glance at what's out there, there are some notable names, especially Google, because the net stocks got hit off of this Netflix tonight. So, tomorrow I think there's like Baxter. I'm trying to remember. Philip Morris was another one getting outside the tech sector, but of course the big ones in the tech sector, Google. It's going to be another volatile day. I'd be extremely surprised if it's not. I don't know that we're going to get 100-point moves both ways in the same day on the NDX like we saw today, but I definitely think you're going to see wide ranges, lots of volatility, just as we've seen recently, and that, folks, is a recipe for disaster if you don't know what you're doing. So, I guess I'll end this show on the thought that, if you don't really understand or you don't have enough experience underneath your belt, when markets get volatile, you have to cut back on your size, or you have to spread trade, or you have to do something to where you cut your risk down. You can get wiped out in these markets. So unless you are very comfortable with your trading, I would suggest that you really step back and say, before you do anything, and you should do this any time, but especially now, how much can I lose? Don't think about how much you can win. How much can I lose? Right? 100 points on the S&P is a huge, on the NDX is a huge move. 50 points on the S&P is a huge move as well. People can get wiped out on those trades. And so don't be one of those, right? You can always make money as long as you have money. If you don't have any money, it's game over. You're watching from the sidelines, and that's not where you want to be. I hope you did well today and managed to get through this all. It will settle down again. I think there's a good chance that today was your bottom, at least short term. Have yourself a great night. I'll see you tomorrow. Good night.